Hello, everybody. Welcome. My name is Kurt Klaus, and thanks for joining today's Agent Advantage webinar. Topic today is help more buyers with renovation loans. Appreciate you being here and taking the time. These webinars are all brought to you by all rate companies, all 5 of our family of companies, and these are presented for you, all of our referral partners that work with all the rate companies. This is a timely topic with today's low inventory. We would like you, the real estate agent, to help your buyers purchase more homes and for you to do more transactions, for you to be more familiar and comfortable with renovation as an option. A reno loan can be the perfect fit for your buyer who's been house hunting for a long time, for example. It lets them find an existing home and they can add everything they want to fit their needs. Or maybe a home buyer wants to fix up the property before listing it on the market. So great renovation loan option type of financing that covers the cost of the home as well as the planned upgrades and the planned repairs so they can find an existing home and make it the home of their dreams. So we do these webinars live. Again, thanks for joining. So please ask your questions in the go-to questions bubble. We will answer questions at the very end. There is a lot of information today. We're going to stay off video camera so you can read the slides that we are going through. So again, lots of information to cover. Take notes, and we'll cover the different loan programs, the consultant info, tips for buyers, a couple of quick mentions. But again, these are brought to you by the Agent Advantage website, agents.rate.com. We have an Agent Advantage Insider Facebook page. You want to check that out. So again, please ask your questions. I would like to now introduce our VP of Mortgage Lending, and Chris DePape is the Midwest Renovation Loan Division Manager. No one knows renovation loans better than Chris. She's probably done thousands of renovation transactions. I will hand it over to Chris for her presentation. Hi, Chris. How are you today?
Good. Thanks, Kurt, for having me. Appreciate it.
Appreciate you being here and sharing your wealth of knowledge.
Yep. Let's get right into it, if that's good with everyone. We'll start off with some photos, Kurt, because that, to me, tells a story. We're going to start with some projects we've done. Renovation can be used for purchase or refinance. We're just going to show you a couple projects so you can see some before and after photos. This one was a $51,000 project, just took a couple months. The project was midstream. So when you're, as an agent, see a property that says cash offers only, I'm not sure why, because typically we can do a renovation loan on properties that are in any type of condition. If there are title violations from the municipality, though encumbered on title, that could be an issue if they've done a lis pendens. But otherwise, if homes are not habitable, but there's no title violations, we are fine to go forward with them. This property was not habitable, as you can see. Here's the finished, product after they redid and cleaned up the mold and remediated everything. They followed all the code guidelines and finished that project. This next project was a $168,000 project. Again, another midstream project that we were able to finish. Here's the after photos, okay? The next project was a home that was increased from 1,100 square feet to 3,300 square feet, adding a second story, new garage, new bathrooms, and then when we bumped out to do the addition, we were able to do a finished basement. So here's the before, here's the after. So significant improvement to this property. Then we did one also that was, this one had a court order to be demoed, but now we won't be able to do a court order demo property. It can't have any encumbrances on title. But if it doesn't, and we just had to do, this would be a complete tear down to foundation and rebuild, which is allowed on FHA. And here's the final of what they looked like after it. Then this property was just an older property, original owner, okay, elderly woman who passed. She sold her home and obviously it needed to be updated. Here's the before, and then here's the after. So you can really see, you can pretty much buy any property in any condition. and update it using this program. This last one we have here was another project that this is a very distressed house, just, you know, lived in hard, not a lot of repairs were done. Clients bought the house, and then here's the finished product right there. So I think the before and after photos definitely help people see, you know, it's hard to walk into a property and have a vision, but that's what we do, is we provide the funds to purchase the property, rehab it, all in one, and then you do a low down payment. So I'll walk through how these work. And again, any questions, throw them in the chat box. I will answer every question once I get through just talking a little bit about the program. So we have different renovation loan programs. We have conventional renovation, and we have what's called FHA renovation. They're two different programs. They have different amounts that you can do for work. 35,000 is for limited, 50, and then standard is anything over 35. There is a new FHA guidance that will start in November, increasing the project cost to 75,000, and you don't need a consultant until you reach that amount. And I'll explain what the consultant is and what they do. So this loan will allow for a person to buy the property, fix it up. If there's structural work required, we can do that. And we can roll up to 6 months mortgage payments if it is a bigger project over 35,000. They are going to be changing the guidelines that you can roll up to 12 months, effective 11/4. So I put that in here. I don't want to focus on too much. I'll follow whatever the guidelines are, but we can roll in mortgage payments. And we do use a consultant if the work is over 35,000 right now. We also have a VA renovation. So if you deal with any veterans, this is a great program because VA has a little bit stricter appraisal requirements. And this program allows us to fix those in case the seller can't but wants to sell to a veteran. We can help them get into the property by utilizing this program. We also have the HUD REO. So if you have any clients who are buying a HUD REO home, we have $100 down. It's the lowest down payment besides VA, which is $0. If you're buying a HUD home and you have a client who is purchasing one, they can put as little as $100 down. They can get a credit of 3% from the seller, and then we can do renovation as well with only the $100 down. So it's a phenomenal program for your buyers if they're able to secure a VA loan. So let me move on to the next screen here. So some common loan features, I talked about it being for purchases and refinances because I do get questions where people don't think they can refinance into renovation. Why this comes up is if you have like maybe a market where you have to close super fast on an outdated home, but it's habitable, but just super outdated, you can use a regular loan and do a very quick closing at Guaranteed Rate or at any of the rate companies. You can typically close in 2 weeks. Then we can go into a refinance and get the renovation money back out for the client if they won't give you time, because typical renovation loans take about 60 days to close. So again, we can do it on purchase and refinance, and we utilize the HUD consultant. I'll talk about his role in a little bit. And then work is started when the file is closed and permits are obtained. We can also roll in mortgage payments if the property can't be occupied. And on multi-units, if there's only one unit that can't be occupied, they can prorate and determine that unit what the rent would have been, and they can roll that in. So we have a lot of cool things we can do with the program. And we do pay out the GC or their vendors on all of the programs. For example, on the 203K Limited, we'll give 50% of the work cost up front, then 50% when it closes. On our standard, which is for larger projects, they'll do 50% of material funds direct to the vendor for roofing, lumber, flooring, windows, and cabinets. So again, it helps at least the contractor get some money to these vendors to order materials, and we need the permits to do that. Then we have our conventional program where, again, they'll give up to 50% of material cost. They'll do 25% to vendors and 25% to GC. Again, VA renovation, we don't have upfront draws on that. We'll follow the FHA standard. So if there's certain things they're doing that would allow at least vendor payments, we will do that. And Freddie Mac follows the same. The biggest thing is getting the permit. And some contractors say they don't need permits, but we have to call the municipality to check. So if they're trying to skirt around getting permits, we always are going to validate it. So make sure if they need permits, they follow the requirements of the municipality. Some common features here too on all the loan programs. The borrower can be their own GC if they are a licensed GC. For the home style and choice, which are conventional renovation, you can do self-help, again, if you're in the trades. But if you're not a licensed GC and you're in the trades, and I want to bring this up because a lot of people who do these tend to be in the trades, meaning they might be a carpenter or electrician. If they want to run their project, they would have to get their subcontractors validated. So it's a little more work for the subcontractors, but in the end, it saves them a lot of money if they can run their own project. Family members are not allowed to be a GC on the 203K, but they are allowed to be a GC on the conventional. And tenants can buy from a landlord on either program. Agents can gift their commission to aid the borrower in purchasing property on conventional renovation, like they can, gift their commission towards closing cost credit, which can help, but that's not allowed on 203K financing. On 203K for the FHA program, no family member can be involved. Like they can't be the GC, they can't be your agent. So if you do have like a family member who wants to do a 203K, you would have to run a different realtor on the contract. We can't have a family member be on the contract, and hopefully you can work out some type of payment with your broker owner. So that's just a little side bit there on FHA. For multi-unit properties, if one or more of the units are occupied, again, the mortgage reserve that we can do would only be on the unit that's not occupied, and we'll just do a proration. And then the borrower is responsible for paying the portion of the mortgage that they're able to cover because they live in the home. So the FHA 203K and the Fannie Mae home style definitely differ. And people say, well, why would you do one over the other? There's pros and cons of both. FHA 203K, when you do one of those, the benefit is you can have a much lower credit score, and it has one of the lower down payments out there. The con or negative would be that FHA requires more work because they follow a guidance called HUD minimum standards. So there's going to be things that on the conventional renovation program you do not have to fix, but on FHA it becomes mandatory based on their guidelines. So that's kind of a negative. Also, some people with really good credit think they have to go 203K because that's the only loan they know. But if you have really good credit, 203K charges expensive upfront mortgage insurance, whereas conventional doesn't. So I try to explain to them why we're going to use which program. Also, the conventional program has much higher loan limits in most of the counties, not all, most, okay? So those are some reasons why we do what we do. This chart just shows a little bit about the differences in the program, but pretty much they're very similar with down payment and reserves. The only difference on the conventionals, when you do multi-unit, you need a 700 credit score or greater. So that's a little bit about the two programs. With the renovation loan, there's no income restriction. It's any borrower anywhere can qualify for these. And it's just a solution to help borrowers buy homes that are either outdated or maybe they need to do an addition, et cetera. We can finance properties that need minor repairs or even major repairs. It doesn't matter. We can help in any situation. We give the cost to purchase the home, the cost for the rehab, and the cost for permits, draw inspections to pay the contractor, contingency reserve, which is for cost overrun, title update to keep the title clear, and architectural and structural engineer fees, because those are things that are typically involved with larger projects. Any buyer can close on a property as is, as long as title is clear. So it doesn't matter the condition of the property, and they can get the money to buy and renovate. You can also refinance, as I stated. We would have to pay off the first mortgage, and then we can get them any funds they need for construction on their home. That's great for buyers who maybe just purchased a home and don't have a lot of equity and are thinking about doing an addition or the gut rehab. There's not going to be a home equity line available. This is a perfect solution. Down payments, VA is 0. We have the HUD $100 down. Conventional, there is 3% income based. There's also 5%. So very low down payments on this, which is great for your buyers. Credit score typically on FHA can be 580 or greater. 620 will get a little bit better rates. If we go conventional, they can go over 620, but typically on conventional loans, you need at least a 680 because it doesn't get through the system. Rates will be slightly higher on a renovation loan because it's construction, there's more risk, and typically they charge a 1% discount fee. The repairs and improvements are done after you close, because I get people asking if it has to be done before you close. It's not done before you close. It's done after. This way the seller doesn't have to do anything. They don't have to be involved. Once you close, you're the homeowner and permits are obtained on your behalf. We set up a construction escrow to pay the contractor. We will also utilize a HUD consultant often. Right now, anything over 35,000 for FHA requires one, and for conventional, anything over 50,000 requires one. Those will change in November, as I stated earlier. The consultant comes out, meets with the client, and does a write-up with an estimated cost of repair. He then gives you a blank version of the same write-up for you to give to your general contractor to do the bid. Occupancy types that we do are primary homes, 1 to 4 unit, second homes that are 1 unit, and investment properties that are 1 unit. We also do PUDs and condos, and we can do mixed use on FHA or 2-unit conventional. So those are a little bit of the program and product type and property type. Here's an example of the loan limit difference, because when I talk about it, people are like, well, how much different is it? This is just a sample for Cook County. Can't do every county. I know people are on from all over the country, but here, if you look in Cook County, you can see the single family loan limit is much higher on conventional. So I'm often using conventional on my higher priced homes because I need the loan limit. So I do have to pay attention. I check each county specifically. There are higher cost counties that have much higher loan limits, such as Massachusetts, New York, New Jersey, California, Hawaii. Those will have higher loan limits on the FHA side and the conventional side. Here's an example of the FHA high cost in Hawaii and other high cost areas, which are like California and New Jersey. You can see Hawaii even increases more. Then the program, again, we talked about the HUD consultant. We will provide a name for you to contact so you don't have to go through that, situation, because it's difficult to locate these consultants. So we will provide the consultant for you. And then you schedule the appointment and they come out and they will do a write-up with how much the cost is. A very important thing when we do renovation loans that get kind of lost in the shuffle is that if the client is going to change the floor plan, like take a closet, make it a bathroom, take 2 bedrooms, make it 1 bedroom, maybe add a bedroom, any type of change to the floor plan then requires a current floor plan and proposed floor plan. Something like that typically costs $400 to $600 to get, and you would just contact your contractor or a local architect to draw that up. We would require that to order the appraisal, and work must be started then once we close the loan. They would like work to be started in 30 days. Well, people say, wait, I got to get permits. Once you apply for permits, that constitutes you starting this process. So as long as they apply for permits in the first 30 days, it may take a month to get the permits, that constitutes you starting. Work must be completed within 6 months. And again, in November, it's going to be going up to 9 to 12 months for completion. We do give month-to-month extensions, and that's one of the reasons they extended it, because a lot of these projects take 6 to 9 months if they're bigger, like if it's an addition or a gut rehab. And then we have something called a high cost test. The only reason I mention this, in some of my communities where there might be lower priced homes, it's a little more difficult to pass what they consider normal cost. Well, renovation's not a normal loan, so we don't have normal costs. We have higher costs because there's more to it. We have inspections, we have draw fees, we have a supplemental origination fee for the draw department, we have permits, we have architects. So you can see there's much more in terms of costs. So if we don't pass the high cost test, we can't do the loan. We check case by case, but someone once said, what's an average number you see? I have a very difficult time with loans under 80,000. So that's kind of a benchmark. If it's under 80, I have to do the high cost test to see if we can move forward. I'm going to talk a little bit about the role of the consultant. The consultant is going to be assigned immediately once we have a contract. That's the first person I care about. They are the most important person because 30% of the deals die once they see the house due to the fact that the house needs too much work. It's too much money. No one really knew. And that's okay. People don't know. They watch TV, they see the HD TV. It's 30 grand, your house will be done in a day and move that bus or whatever they say, right? That's not reality. They will come out and give you a reality check of everything you want done. And they can also scale back. Sometimes people get a little excited and they might be like, oh, I'm just going to do this. But once the consultant's there, they're like, oh, how much would it be to do the bathroom or this? We can always scale back once we get the report, but he's very important because he's going to be the first person that can give you the cost numbers within a week. And that way you can decide if you want to move forward. One thing for the realtors here on the call, we can't do quick like contingency or inspection periods because we have to go through the process of getting this consultant. So we typically ask for 15 days for them to do the inspection and get these numbers and GC in order. Once we have that, the consultant will give, again, this bid so that we can review it with the client. And then the consultant stays with this client the entire time, because once the file closes, well, they're going to work with the contractor too to finalize the bid. Sometimes there's some back and forth once we get these bids together and they talk with the contractor and finalize it. Then when they close, they'll be able to give the GC like the first draw. If it's required, it runs through the consultant. Permits need to be obtained, and they will stay on the project, do all the inspections, and help get the general contractor paid out. So this is a very well-structured loan with a lot of guidance for your client. As much as this might be a lot to absorb, which I get, we're just trying to show you what we can do. We handle all of this and explain all of this to the client. I give them webinars to watch, and everything to explain. So you will get all of this to your clients. They'll be very, very informed about the program. So once the consultant and everyone signs off, the loan closes. A welcome letter is sent out explaining how the draws are handled, which we handle direct through the rate companies. Then the GC will obtain permits and provide the permits to start getting the payouts. Then draws are going to be done as work is performed, and there's up to 5 draws. If additional draws are needed, that is okay. The homeowner would pay any additional draws required. This is the current schedule for the consultant for FHA loans. So it's based on the repair. So if you have a client who's like, I think I need to do $60,000 worth of work, the fee for the consultant to come out would be $800. This will be changing November 4th. This is the current conventional fee schedule. This will remain in place with the change. The conventional is a little bit more expensive for the write-up, but the benefit of having a conventional write-up is you will often get a much lower cost of repair write-up because they do not have to include FHA minimum standards. Effective 11/4, the write-up is going up. I just threw in this slide. It's not going up a lot for FHA, couple $100. It looks like for some of them, well, maybe a little more than that. So like $1,000 would be the cost if the work is 50,000 or less, and then it goes up in increments. Then the draw inspection fees, that is when the contractor needs to be paid. They will be approximately $375 per draw. They can also charge change orders. Now, they normally don't if you only do a couple changes, but I just recently had a client who did literally 12 changes after the write-up. About the 5th write-up, the consultant started to charge just because it gets to be, they're incurring costs. And then if there's any reinspection fee needed, they may charge a reinspection. And of course, mileage, they can only charge if you're located over 15 miles from their office. There are allowable seller credits. Realtors should use this even on any transactions they can. I love keeping money in my buyers' pockets. If you have a principal home or a second home with an LTV greater than 90%, you can only get a 3% credit. But once you put down 10% or more, you can go up to 6%. And even 9% if you do 25% down. And then investment properties, we utilize on the renovation side, we always ask for a 2% credit because we have higher cost and we want to make sure we don't have any issues with the cost test. So these are allowable interested party contributions on any contract. Now here's some information for you guys as agents, like helpful hints. Once your contract is accepted, we schedule the consultant appointment immediately. And the agent and buyer will meet the consultant at the home to do the walkthrough. It takes usually an hour to 2 hours. The consultant will then provide the report within 1 week to the buyer and myself or your lender. They will go over it. The lender and you should discuss it, scale back, add on whatever you need, clarify. Then you provide your blank bid to your GCs, which usually we ask them to come out that second week and provide their bid within the following week. From the first day you and I talk, we are trying to get the GC bid by day 21 to day 25, and then any drawings by day 25 to day 30. That is when I can finally order the appraisal. So you can see as agents, if you're doing a normal loan, I order the appraisal day 1. I don't need to wait for anything. But here, we're sometimes, if you're not doing anything that needs architectural drawings, we can order the appraisal typically at week 2, like at day 15. If you are doing architectural changes, we can order the appraisal typically on day 30. So again, you'll get the blank bid of repair, which the contractor fills out. And then we decide if the buyer's moving forward. That's when we get out of like attorney review period or your inspection periods, whatever you call it in your area. 15 days is what we need. So the agent may need to go back out to the home to meet the contractors with the buyer. So you might have to go out there either 1 or 2 more times, depending if they have 1 GC or 2 GCs. We like to recommend 2 GCs if you can get 2 GC bids. That's just in case one GC goes to you, or maybe they take on too much work and they're too far out and you want to get the project going. It's always good to have 2, but we don't need to. We absolutely got to have 1 that you approve, but we always suggest 2 in case something happens. And if you're listing a property and you're an agent and you have like maybe a distressed home, you can always, make a remark, a little note here, like bring your contractor, this property is eligible for renovation financing. You can also show them some of these before and after photos. It's always great to have that handy. And we also do ADU units. There's been a lot of chatter about DADU, detached ADUs, and ADUs that are attached. We are allowed to do that through the renovation program if your client's buying a property and would like to add that into it. Again, these would take 60 to 70 days to close because I need the ADU drawings so we can use that with the valuation. Freddie Mac allows a very small portion to be used for rent, but if you're doing an ADU with Freddie Mac, that requires a larger down payment. Fannie Mae doesn't have that same requirement, but they do not use the rental income. So ADUs are allowed, but we're not usually using rental income. I just want to explain that. But you as the homeowner, once you build it, I have clients in Seattle getting $3,500 a month for their ADUs. So we're doing a ton in Seattle and Colorado with ADUs. First-time buyers that maybe want to create an investment portfolio can purchase multi-unit properties with 3.5% to 5% down options through FHA or conventional. It's a great way for young buyers who don't have 20 to 25% down to move into a home, stay there a year, and once they're there a year, they're allowed to move out. You can do it again. So this is a really crafty way if you have some smart buyers looking to try to create investment. I can't do it as an investment property. They have to live there 1 year, but after 1 year, they're allowed to move out and rent it out. You can use the renovation loan program to add, I said, an ADU to a 2 or 3 unit or a single family. And there are different options for down payment. For listing and buyer's agents, the 5% down on multi is through our conventional Fannie Mae program, okay? They do allow ADU, but they don't allow income. If we're doing a multi-unit, we do need some reserves. And I only mention that because sometimes people are really tight with money and they're trying to thread the needle, and it doesn't work. So we're very cautious before giving you a pre-approval. I just got a contract on a renovation loan today where they didn't contact me first. It's not working out very well because there was so much not done right on the contract. It needed to state it was going to be renovation. It needed to state proper timing to close. Basically, they made a conventional offer, knew they wanted renovation, but didn't realize they needed to make a specific offer. So I'm going to explain some of the verbiage too. Again, reside in any property for a year. You can move out, rent it out. That's allowed. And for the FHA, it's a little bit lower down payment, but we do have on 3 and 4 units something called self-sufficiency. I'm going to just spend 1 minute on self-sufficiency for any FHA loan, regardless if it's normal, just you get an FHA offer as an agent, or if it's a 203K. If you are marketing a 3 and 4 unit building and you are not aware of this verbiage, self-sufficiency, just pay attention to this. Even write a couple notes. You're welcome to text me if you need clarification. 3 and 4 unit properties on renovation, they will use market rent on all of the units, add that up based on the rehab units, what the market rent would be, then they times it by 75% because they assume in every calendar year, there could be a 25% vacancy for tenants moving out, maybe tenants having a hardship and not paying. So this is a factor that they use to make sure that you, as the homeowner, can afford the payment with this vacancy factor. So if this does not pass, if the mortgage payment is higher than the rents times 75%, FHA has a hard stop. It's an automatic decline. And if you have an FHA regular building, move-in ready, and you've had tenants there, they will go off of the leases that are currently in place. So if you have under market rents, like I recently had a building that was being sold, and the renters all were there for over 10 years, I couldn't get the self-sufficiency to work because I had to use the market rents. So just that's something out there. If you don't know what it is, make sure your loan officer does if you're going to deal with a 3 or 4 unit on FHA. Just want to let you know that in case you are not aware of it, okay? You can only have one FHA loan in your lifetime unless you have expanding family or a job relocation. So for agents that have buyers or sellers, some ways to utilize this. If we've had certain clients like, I have to buy in this school district, or I need to live here because my parents are going to help with the kids, but there's not a lot of homes. What I'm looking at is distressed. Let them know, you have this program. You can update anything like, hey, we got you. I know these houses aren't perfect, but we have this renovation program. You can do an addition. You could create an open floor plan. You can build a garage. Anything that will help them, we can help them with. When you're a listing agent, now you want to put maybe in the remarks, bring your interior designer. This qualifies for renovation. Create your dream home. We have flyers through all the rate companies that can be given to you to put out. There's the before and after photos from here that you can also use. So just maybe as the agent know that this is out there. Give you an example, we had a parent pass away, 3 siblings, they all had a great agent, they all interviewed, they met with each agent. First 2 agents, oh, this is outdated, your mom didn't, the house is run down. Very negative connotation. Yeah, we could sell it, probably cash buyer. Both agents were talking like that. Third agent came in, had our presentation. Hey, you mentioned your mom hadn't, kept up the house as much as you had hoped. This is a great program. We can get a finance buyer instead of a cash buyer, so you will get more offers. You will get a higher price. Our agent won that listing just by having this knowledge. I'm not saying you're going to use it every day, but if it helps you get a listing or two, just keep it in your toolbox, because the more you know and the more educated you are, you might win a listing just by mentioning this, even if it doesn't need it or it might need it, but you knew about it, maybe you win a listing. We're just trying to help you guys, get more revenue in, make more sales, help more buyers and sellers. So any property can be purchased in as is condition. Renovation can be done as long as the existing foundation remains in place. We do have construction loans. We didn't have time to deal with those today. We're just talking about reno. But if you have any questions on construction, you can reach out to your loan officer. But we can finance homes that are in any condition. We use the future value of the property, which is why on refinances, when there's not a lot of equity in a property and you're doing an addition, I don't have any problem doing that because I'm doing it based on the addition and the new square footage. As listing agent, buyer's agent, obviously you can market REOs that are distressed, foreclosures, estate sales, outdated properties. We do not need utilities on. We do not need running water. There can be tarp on the roof. You can have water in the basement. You can have standing water. You can have no kitchen. The condition of the home does not matter. And again, typically these close in 40 to 60 days. So that's basically a quick overview. I would love to open it up to any questions. I don't know, Kurt, if people can unmute or if they have any in the chat box. We can start with the chat box, but then if people want to unmute and just ask, I'm happy to answer scenarios, questions, anything.
Yeah,
Fire away.
let me read a couple. I know there was a lot with specific situations. I know it's different in
Perfect.
every state.
I
Someone
love
said,
it.
for $4.5 million home, it needs $500,000 in renovation. I guess it's
Yeah.
specific to the state.
Yeah,
They
that's
have to,
specific. Not every maybe rate company has exactly what you need, but if you can't find it, feel free to, reach out to me and I can make sure we get you taken care of. There's different programs at different companies.
great.
But yeah, we
Another
can
one.
help with that.
Are investment properties allowed on FHA? I think you touched on this.
FHA, no. For investment, for conventional, we can do 1 unit investment, 740 plus credit, 25% down is standard, and that's off of purchase plus rehab.
Thank you. And can this be a second home or has to be the primary residence?
Second homes are allowed. On second homes, it'll be 20% down, and typically we would want a credit score of over 700 for a second home. 1 unit only on second home.
Very good. Because here's a good question. Like as the listing agent, before the house qualifies for reservation loan, do they have to do this in advance, or can we assume that any home can get this program?
Any home is eligible. We don't say no. The only thing would be if the title has Liz pendants or anything encumbered, that could be an issue. But we do tons of homes. So it's not. We don't discriminate on homes. So yes, any home can be qualified for this.
Thanks. And the picture showed interiors, can this be used for adding or repairing a roof, or can a
Oh,
swimming pool
absolutely.
be done
Yeah, so let me explain that. Swimming pool installs, we do like where it adds value. My states like California, Arizona, Texas, Florida, I've done tons of them. On FHA, they don't allow for luxury items. They consider that a luxury item. They will do minor repairs on, pools, but if like a pool is trashed and it's a hazard, FHA would require it to be like cemented over. We did one on an FHA, they just cemented it because the pool was just a mess and the clients didn't want it because they had little kids. So we just cemented over and fixed that hazard. But on conventional, yes, we do pool installs. We can repair pools. You can do garages. You can do an addition. I can do patios. We can do decks. Anything like that is allowed.
Very good. David, yeah, you mentioned those updates that would be effective in November. I think the slide did say 14.
Yeah,
I
it's
assume
11/4, 11/4 of 2024. FHA's just, so basically, I just want to explain for FHA 203K limited, they don't require a consultant right now up to 35,000, but that includes soft costs. So really it's about 28,000. Here's where it gets a little dicey with FHA. I'm just being honest to everyone on the call. FHA has a list of HUD minimum standards that there's not really a list. It's like they're known by these consultants because they have to take a course. So if a GC goes out and they don't know these FHA, if you're doing an FHA loan, they might be like, okay, here's my bid for 28,000. And then my appraiser goes out there and said, hey, you missed 14 HUD minimum standards, so now it's 40,000. Well, now I need a consultant, which I should have gotten in the first place. So if it's super simple for FHA for a property and I can see photos and maybe the inspection, I could be like, you're going to be fine without a consultant. But right now, pretty much on 95% of all FHA, the work's just too much and we're needing a consultant. They have raised it effective 11/4 to 75,000. Again, that includes contingency. So it's really going to be more like 60,000 of work that they'll be able to do without having anyone come out to the home. And I do mention to buyers, hey, if there's peeling paint or broken windows, I try to tell them certain things that they need to tell their GC will need to be fixed. But on Homestyle, we don't have that. So and hopefully that explains it. But yeah, on 11/4, there's going to be a little bit more generous, opportunity to not have the consultant. And it's going to work better on our Homestyle or conventional because they can go up to 75,000 of construction costs without a consultant.
And David, so that should be 24. I noticed that too. So 11/4/24.
Oh, I put the wrong year, sorry.
Yep, that's okay. That's what he's referring to. And the qualifications are the same for the borrower to qualify for the program.
Yeah, yep. I mean, FHA and Homestyle have different credit score requirements and different DTI, but in terms of the program, the renovation programs run very similar, except FHA has more cost because they have minimum standards to the home.
Yeah, we got a bunch flooding in here. I'll try to pick these up. Do the borrowers select the fixtures and features? I would assume that's working with your consultant.
So I know that's a great question because at the beginning you're like on day one, oh my God, I'm buying a house that needs work. I don't even know what I want. Well, that's why these HUD consultants are great. Because if you don't know what you want, it's good to have these people here. Even if it's not required, almost all of my clients use one. Because when I tell them for $1,000 or $1,500, you're getting basically a project manager who knows everything, who knows how to get your GC fixed, who knows how to help you price out your finishes. GCs have a rough time doing all that with you because they're so busy, okay? And often GCs don't really know if you're going to use them or not. So they're not always thrilled to come out. That's the biggest thing my clients have been saying. It's hard to get a GC out. Well, if you have a contract, you have a bid, and you say, hey, I already know the work I need done. I'm in contract. I have this paperwork. This is the scope of work. I just need you to put in numbers. They're way more, apt to come out because they know you've really vetted this and it's not just them wasting their time. So we use consultants on almost everything, just so, people know out there. It helps tremendously to get these closed way faster.
Thanks. What is a safe period of time to make sure the consultant does the cost estimate and get the information back to make sure the deal makes sense? I thought you said 15 days.
15 days is the required minimum inspection period. In that 15-day period, if, like, let's say we think the work's going to be 80,000, but then they find a bunch of structural and other things wrong and it's 150,000. That's when me and the buyer say, hey, this is too much. We can go back and ask for a price reduction or see if there's any way to work it out. If we can't get it worked out, they will need to be able to cancel and get their earnest money back. So we do require a 15-day period.
Thank you. If the purchase price plus renovation cost is over the current marketed in the same area, is it still possible to have it completed if it's over the, market value in the neighborhood as far as the
Yeah.
appraisal? Yeah.
If it doesn't appraise out, like let's say you buy a house for 300, you're doing an addition for 200, it's supposed to appraise at 5. If it comes in at 475, either the borrower would have to bring in 25,000, the seller could reduce the price by 25,000, or the borrower can maybe scale back some of their allowances on finishes, and that would be how we could accomplish, or they could cancel. That would be under the financing contingency that it didn't appraise, and they could get their earnest money back.
Very good. Good questions. A lot of people are asking if this presentation is available.
These are great questions. Thank you.
Anyone who, it's great, the questions will be part of the recording, but anyone who registered or who is on the call now will be sent a recording of Chris's presentation. It looks like that is the seller is paid at the completion of the renovation as far as the timing, Chris?
No, the seller's paid when we close. So like typically we close in 45 to 60 days. So if you have a purchase contract for 300,000 and let's say you're just doing cosmetic updates of 100 grand, we go to closing 60 days later, the client, the seller gets their 300,000. We take the 100 and put it into a construction escrow. Seller's paid out, they're gone, they move on. Now our buyer starts to work with their GC to get permits and start their process. So the seller is paid at the closing table and so are the agents. There's no delay in that.
Got it. All right. Want to thank you, Chris. Wealth of knowledge. Appreciate everyone joining the call. Thank you for the questions. Again, can't thank you enough, Chris, but great way in today's market to put reno in your tool belt, like Chris said, and use this as an option to your buyers to add exactly what they are looking for or their must-haves to a house that they can find in the area where they're looking. So really appreciate it, Chris. This is all great stuff. And
if anyone has one-offs or anything different, there's my contact. You can just text myself. You have like a one-off or something I didn't answer, feel free to reach out, or an unusual, happy to help or direct wherever we can help.
It's very good. Again, thanks, Chris. Thanks, everybody. Enjoy. Actually, I always enjoy doing these rental webinars with you, Chris. But thank you, everybody.
Thank you.